Presentation, you can see the definition of financial statement. Financial statements are statements which contain summarized information of firm's financial affairs organized systematically. Financial statements are primarily prepared for decision making. They are intended to reveal the financial position of the enterprise, the results of its recent activities, and an analysis of what has been done with the earnings. Now coming to the point of financial statement analysis, as I said earlier, it is the process of identifying the strength and the weakness of the firm by properly establishing relationships between the items of financial statements, and it helps us to take investment decision. It also helps us to assess the liquidity of the firm, assessment of profitability, performance evaluation, forecasting, etc. There are many tools and techniques of financial statement analysis. You can see comparative statement, common size statement analysis, trend analysis, ratio analysis, fund flow statement analysis, and cash flow statement analysis. And today we will discuss only comparative statement. Comparative statement, it is the historical summary of same item or group of items of consecutive income statements or balance sheets of a company. In this session, I will not discuss the advantages and disadvantages of comparative statement. You will get it separately in my notes. Today we will see two types of problems. Number one, comparative balance sheet, and number two, comparative income statement. In case of comparative balance sheet, you have to follow these three steps. Step number one, step number 2, and step number 3. Step number 1, write the figures of two balance sheets, calculate absolute change, calculate percentage change. The formula of percentage change is absolute change divided by base year figure into 100, and the formula of absolute change is current year figure minus base year figure. Let me show you the problem first of all. And this is the pro forma. This is the pro forma. You can see previous year, current year, and absolute change, percent change. This pro forma is given as per the Schedule 3 of Companies Act 2013. Now coming to the problem. In this problem you can see, prepare a comparative balance sheet of Alpha Limited as per modern approach, and in this question 2 years figure are given, 2018 and 2019. So 2018 is the previous year and 2019 is the current year. Here's the detail you can see, and in notes to accounts, here you can see the breakup of share capital. Under share capital, there are equity share capital of 10 rupees 10 each and 9% preference share capital of 100 each. And under short-term provisions, you have provision for disputed claim and provision for tax. Now we have to prepare comparative balance sheet. Now the solution is very easy. You just copy all the figures, all the items of balance sheet, equity and liabilities, shareholders fund. Under share capital, put the detail of share capital like equity share capital, 9% preference share capital, and here given reserve and surplus, put the value of reserve and surplus, and all this figure just copy from the question and put here. All the figure of 2008 and all the figures of 2018 and 2019. Now in absolute change, the formula is current year figure minus base year figure. So this is the current year figure, 375 minus 300. So my absolute change is 75, and now you have to calculate the percentage change, and the formula is absolute change divided by base year figure into 100. So the absolute change is 75 divided by base year figure, this 300 into 100. 75 divided by 300 into 100, you will get 25. You will get 25 percentage. Okay, so in the entire sum, or in the entire solution, you have to repeat the process. You have to calculate the absolute change for each item. You have to calculate the percentage change for each item. And now the total is given in the question. The total is given in the question 1190 in case of 2018 and 1042 in 2019. So here put the total, then also find out the absolute change, and here if you deduct 1190 from 1042, the figure comes in negative, and that's why the percentage change will be also negative. As it is, find out all the absolute changes in case of items of the asset side, and then calculate the percentage change, and the total will be same. So this is the comparative balance sheet. Now coming to the second problem. From the following figures of the balance sheet of X and Company Limited, and prepare a comparative balance sheet. Two assets figures are given here, 2017 and 2018. But follow this sum carefully. The items are given here, but we are supposed to arrange this in the format of schedule 3. So in the solution section you can see we prepared the same format of the balance sheet as per schedule 3 of Companies Act 2013. Now under equity and liabilities, you have to maintain all the items as per the pro forma. This is the pro forma I've given, so try to memorize this pro forma. Then now coming back to the problem. So here equity share capital 4 lakh, 5 lakh, preference share capital 2 lakh, 1 lakh, 10% debentures, it will come under long term loan, and reserve and surplus will come under shareholders fund. See, under shareholders fund, share capital, and then equity share capital, preference share capital, reserve and surplus. Put the figures as per the question, then find out the absolute change. 5 lakh minus 4 lakh, that is 1 lakh, and the percentage change is absolute change divided by base year price into 100, that is 1 lakh divided by 4 lakh into 100, that is 25%. Here the absolute change is negative, so percentage change will also be negative. Total, in case of total, calculate the absolute change also. then find out the percentage change. The formula remains same for all cases. In case of asset, non-current asset, just see investment. Fixed asset, nowadays we actually don't use the term fixed asset, we use non-current asset. Under non-current asset you can see property, plant and equipment, all those tangible assets. Now put the figure, find out the absolute change and then percentage change. Non-current investment, okay, then current assets, find out the absolute change and percentage change and the total, and it's very easy. It is very easy. So if you practice this to sum, you can solve any problem of any year. Now coming to the second type, that is comparative income statement. In case of comparative income statement, you have to follow these 3 steps, and let me show you the problem. This is the problem, particulars 2010 and 2011. The value of sales, cost of goods sold and operating expenses are given here. So if you deduct the value of cost of goods sold from sales, you will get gross profit. Then you have to deduct the value of operating expenses from that gross profit, then you will get net profit. So this is the income statement, and in this case you have to also calculate the absolute change and percentage change in the same way. So put the value of 2010 and 11, sales 4 lakh 5 lakh, less cost of goods sold 2 lakh 40 3 lakh 50, absolute change is 5 lakh minus 4 lakh, that is 1 lakh, and percentage change 1 lakh divided by 4 lakh into 100, that is 25%. In case of gross profit, 1 lakh 50 minus 1 lakh 60, 10,000 negative, 10,000 negative, negative 10,000, I mean minus 10,000, divided by 1 lakh 60 into 100, that is 6.525 minus 6.525%. So the process is same. The calculation of absolute change, and percentage change are same. You have to remember this pro forma: sales minus COGS, that is gross profit, then less operating expenses. Now coming to the second problem. Here a PL account is given. And you can see the figures of 2010 and 2011. This is the debit side and this is the credit side. You are required to prepare a comparative income statement and comment on the profitability of the concern. So now you are supposed to prepare a comparative income statement, and after that you have to comment on it. You have to comment on the profitability of the company. You can treat this sum as your pro forma, because all the probable items are given in this question. The objective is to find out the net profit, and to find out the net profit you have to deduct the cost of goods sold from sales, then less the operating expenses, then we will get operating profit. Add non-operating incomes, then less non-operating expenses and less tax. Here you can see sales minus return. So copy these figures: sales minus sales return, that is net sales, then less cost of goods sold, that is gross profit, then less operating expenses. After deducting operating expenses, we will get operating profit. Then add other income, that is non-operating income, less other non-operating expenses. You will get net profit before tax. Less income tax, then you will get profit after tax. Now operating expenses means those expenses which are related to my activities, business activities. So in this question, office expenses, selling expenses are given. So office expenses, selling expenses are related to my operations, are related to my business, whereas interest paid is non-operating expenses. Why? Because it is not related to our operation. Interest paid, suppose you have taken a loan and you are paying the interest on that loan. So this is non-operating expenses. Suppose you have deposited 5 lakh rupees in a bank and you are getting interest on it per year. So that income will be considered as your non-operating income. So first of all, try to remember this pro forma: sales minus sale return, that is net sales, then deduct cost of goods sold, you will get gross profit, then deduct operating expenses, office expenses, selling expenses, and you will get operating profit. Add all other non-operating incomes, less non-operating expenses, you will get net profit before tax, less income tax, then you will get profit after tax. And the calculation of absolute change and percentage change are same. Let me show you one item. 5 lakh, here you see the figure of 2011, 5 lakh 550 minus base year figure 4 lakh 32,874. The absolute change is 67,676 and percentage change is 67,676 divided by 4,32,874 into 100. 67676 divided by base year figure 4,32,874 into 100. You will get 15.63%. Okay. Now you will get profit after tax, find out the absolute change and percentage change. Now coming to the second part, that is comment. For the purpose of commenting on profitability, you have to see the sales figure, the net sales, you have to see the amount of cost of goods sold, amount of total of operating expenses and profit after tax. So find out whether the net sales, whether the amount of net sale is increased or not compared to previous year. So here you can see net sales is increased slightly by 15.56%, and cost of goods sold is also increased by 4.62%. operating expenses also increased by 21.05%. So you can write that management should try or management should try to reduce the cost to increase the amount of profit. Let me show you the comments. Sales increased by 15.56%. The corresponding increase in cost of goods sold is lower. It is 4.62%. As a result, there has been improvement in gross profit. It has increased substantially, 36.03%. The percentage of increase in operating expenses is high. It is 21.05%. Normally, operating expenses should not change much within a short period, and inquiry should be made at the managerial level regarding the reasons of such increase. Non-operating incomes. Non-operating income means, as I said, you have deposited a particular amount of money in your bank. Now you are getting interest on your deposited amount. So it will be considered as non-operating income. So interest on my investment. Non-operating incomes as well as such expenses. Such expenses, the interest that you are paying. Non-operating incomes as well as such expenses have fallen by 41.96% and 37.08% respectively. These have affected the net profit before tax. The ultimate profitability of the company has been affected adversely by a great difference in tax paid. It has increased by rupees 15,000 in absolute terms and by 60%. So here you can see the amount of the tax amount in 2011 is 40,000, which is higher than the amount of 2010, that is 25,000. So 15,000 more. The absolute change is 15,000 and the percentage change is 60%. So we can say that the percentage of tax amount, or the amount of the percentage of tax has increased, and it adversely affected the profitability of the company and the overall position. Now coming to the last point, profit after tax. Still it is showing higher profit. So in 2011 the company earned 68,060 rupees profit, which is higher than last year's profit by 43.10%. So you can say that the overall position of profitability is good, but there are scopes to make it better. So I have shown you how to solve the problems of comparative balance sheet and comparative income statements. If you follow these sums, you can solve any problem of comparative statement or comparative balance sheet and comparative income statement of any year. Okay, thank you. That's all for today, and